Welcome back, dear traders. Here is a red-hot review of the developments on Wall Street. A new bullish attempt was a success on a Tuesday. The major stock indexes closed with confident gains. The benchmark Wall Street indexes closed with considerable gains yesterday. The Dow Jones rose 2.4%, the Nasdaq closed 3.1% up, and the S&P 500 climbed 2.8%. The market owes its optimism to decent corporate reports released by companies with a mega capitalization. Importantly, financial reports for the second quarter will influence dynamics on Wall Street today. Fundamental factors also matter a lot. Investors got to know fresh CPIs which add up to the overall outlook for the global economy. Let me warn you about a high volatility in anticipation of the ECB policy meeting on Thursday. The New York pre-market is unfolding in tune with the background. Top stock indexes are trading mixed. The intraday corridor for the S&P 500 is seen between 3,840 and 3,980. On Tuesday, both the Nasdaq and the S&P 500 rebounded and closed above the 50-day moving averages for the first time since mid-April. It's the first step the market needs to regain its losses incurred in the first half of the year. Wall Street is rallying because investors have shifted focus away from US statistics as well as recession and inflation fears. They are now digesting quarterly reports on top American companies. Yesterday, Netflix inspired investors because it lost 970,000 subscribers, much fewer than expected, less of 2 million. Shares of the streaming company surged 7% in the following pre-market. The net loss of a Baker Hughes oil servicing company increased 5.7 times in the second quarter to $3,809 million against $68 million in the last quarter. The Nasdaq exchange reported on Wednesday that its profit contracted 10% in the second quarter due to swelling expenses, even though the revenue went up. Besides, only 38 IPOs were conducted on the Nasdaq stock market in the second quarter compared to 135 IPOs a year ago. Nevertheless, the net profit expanded 6% to $893 million. According to Refinitiv, analysts predict that the overall profit of the S&P will rise by 5.8% in the annual terms, down from a 6.8% increase in the previous forecast. Tesla shares grew 1.7% ahead of its report of corporate earnings. Shares of Apple, Amazon and Meta are trading mixed. Investors are cautious in the New York pre-market. Some investors took profits gained on Tuesday. By and large, market participants are again taking notice of events in Europe, soaring inflation, and a threat of a slowdown in the global economy. Further market sentiment will depend on new quarterly reports. The US dollar index settled at about 106.60. Its intraday corridor is defined between 106.20 and 107.20. The US dollar is taking a pause in its stunning rally of a few weeks. Today, the euro and the sterling have come under the spotlight. A fresh inflation report from the UK showed that inflationary pressure did not ease in June. The CPI printed a new 40-year peak at 9.4% on year. The euro shed 0.12% to 1.0213 against the US dollar, following the biggest intraday spike in months. The currency market is set to trade under higher volatility today and tomorrow for several reasons. Rumors about reopening of the Nord Stream 1 pipeline after its maintenance, political jitters in Italy, and expectations of a rate hike by the ECB. The loonie advanced confidently yesterday. The USD CAD pays trading with minor fluctuations within the intraday corridor between 1.2860 and 1.2980. Despite a minor decline in the benchmark oil grades, WTI and Brent are still trading above $102 and $105 a barrel respectively. Traders are digesting fresh inflation data from Canada. The annual rate of consumer inflation in Canada accelerated to 8.1% in June, the highest score since January 1983. On the plus side, the actual CPI undershot the consensus of an 8.4% increase. Transport costs rose for the most degree due to sky-high gasoline prices. The core CPI, excluding gasoline prices, surged 6.5% in June on year, following a 6.3% rise in May. Consumer prices climbed 0.7% in months, again slower than an expected 0.9% growth. The inflation rate in June eased from a 1.4% increase in May. Meanwhile, investors welcomed developments in the crypto market. Bitcoin spiked by 7.14% intraday and by 22% for the week, having conquered the peak of 23,515 points. Remarkably, the growth in the crypto market occurred amid pessimistic news. On Monday, the FBI advised investors to unsubscribe from fake crypto apps that had the default users of $42 million. The news did not prevent Bitcoin to overcome resistance of 23,200 and climb higher. Besides, Ethereum grew to $1,571. The flagship crypto seems to be clicking into gear. The nearest resistance is seen at $24,000, and the token could face the next serious resistance at $24,200. Once it's surpassed, the price could rise as high as $25,000. Otherwise, the crypto might dip to $22,500. To sum up, investors are braced for market turbulence today. We wish you profitable trades and see you online tomorrow.